Welcome to the market recap presented by Tackle Trading. Get in the game.
Good afternoon, Tackle Traders, and hello, YouTube. This is Frank coming your way with the market recap for Monday, the 10th of December. Volatility, it didn't go away over the weekend, did it? It definitely another volatile day in the market. Heavy selling early as things were falling through support on the intraday. Of course, it's not a close until it's a close, right? And we did see a lot of resiliency across the board in the market, closing, near session highs and maybe saving the day, at least for one more day. Same can't be said in the financial sector, though, as we'll see when we look at our XLF chart. But there were 40 new 52-week lows in S&P 500 financial companies. Now, I'm not exactly sure how many companies are in that ETF, but it can't be a ton more than 40. So there was a lot of bearish activity. As you can kind of see here, many of these, and these are just the largest by market cap, JP Morgan has broken, a support level. Bank of America, Wells Fargo, Citigroup, Morgan Stanley, of course, Goldman Sachs has been selling for quite some time. We're seeing a lot of selling right now in the financials, a lot of things breaking to the downside here today or in the previous few trading days. So it's not pretty over in the financials as you look at them individually. As we kind of shift gears, there aren't any S&P companies coming out with earnings here tomorrow, either tonight or tomorrow before the open. Very light day, just a handful of companies, all together, but certainly no S&P companies coming out before tomorrow's open. On the earnings front, over on the S&P, a nice hammer to close the day, almost, kind of in a way, kind of opposite of what we saw last Monday, where we saw the gap up, showing maybe the buyers were going to be heavy. And then this week we see, a ton of selling. Interesting to see where we go from here. From a purely technical perspective, I think it is important that we were able to close back, at least what I would consider back above that support level. I do think that is important coming off of those intraday lows and showing some oomph breaking through that old resistance that could have potentially acted as some support. Volatility clearly is not ready to leave us just yet. So, and I think that's going to be, universal as we're trading things within the stock market. It'll be interesting to see if we're able to continue that momentum, right? We had that hammer. It looks a little different, but at the end of the day, it was a hammer that we saw on Thursday of last week and weren't able to carry that momentum going forward. Are we able to carry that momentum? Now, I'm, not super opinionated one way or another. I'll let it see where it wants to go. But definitely for today, at least, very nice movement. Now, we have, a little ways to go before our next, what I would consider major level of support on the S&P down in that 20 mid 25, 25.6 range. If this intraday support does falter, again, in this market, who knows what the heck will happen with the volatility. I don't expect that to be challenged tomorrow. Of course, that's a pretty good move, but I'll never expect that stuff. Keep an eye, obviously, on that intraday low. If we do approach it again, let's see how we react to this intraday high that we put in here today as well. NASDAQ really kind of, once again, was kind of the leader here today, up over 1%. The S&P, the Dow kind of clawed out a technical victory, up 0.18 and 0.14 respectively. But the NASDAQ actually up over 1% here today. It was showing the strength relatively early, and that continues to be very interesting to me. I'm not quite sure what to make of it because this, the individual, the NASDAQ chart, the individual ETF chart, the stocks, within the sector, for the most part, their charts are really, not pretty in my eyes, at least. But we are seeing that that's now 2 times on heavy selling days in the last, just few trading days that we've seen kind of tech hold us up. I'm starting to get interested if I see some signals. Haven't seen them yet. Still going to take some time for them to develop if that's the way it's going to play out. But I do find it rather interesting that tech has kind of been the leader. this past volatile week of trading. Now on the Dow, and this is my opinion, we'll never be able to prove or disprove this, but this is kind of what saved the day for the market in my opinion today. We saw that early selling and things were looking fairly grim, and then over on the Dow Jones we got into that 24, that old support level, and that is where whether it was shorts getting out, bulls getting in, maybe a little bit of both, I don't know. But in my opinion, that's really kind of what saved the day. We kind of started moving off of that support level, and the rest of the markets kind of went along with the ride, specifically the S&P and to a lesser extent the Russell. So I do think that is going to be a very important price point for us to be keeping an eye on, around 24, if and when we are there again. Always want to prepare for that, right? May not think it's going to be, but I'll be prepared if it is. That's clearly an important area. 24.5 kind of acting at ballpark, acting as our intraday resistance. Nice kind of a roundish number, not a ton of longer term support or resistance there. But let's see how we respond to that on the intraday going into tomorrow as well. Both of the S&P and the Dow chart, I mean, those are some pretty nice looking hammer candlesticks, right? So if you're just purely, and I don't know anybody who does this, but if you were just purely a candlestick trader, nothing else mattered, at least I would interpret both of those as nice bullish signals. Now we take other things into consideration, right? There's a lot more going on than just that. But it's very interesting that we were able to bounce so significantly. And then you have the Russell, who, of course, they're in a tougher spot technically. And I think a lot of traders would agree with that. Of course, they were the first index to break down, a nice clean break. Maybe we were going to put in that double bottom or potentially a triple bottom. Of course, that's not the way it played out, closing below that break, that support level on Friday, continuing that downward momentum. Now, much like the rest of the markets, we did rally off of the intraday lows. I still think this is the most bearish looking chart of the indexes. I don't think that's me going out on too much of a limb. Watch that old support level as a challenge, as a potential resistance zone if we work our way back into it. Again, we do have a fair amount of support, coming back into this general area around 14 from days gone by. So this little range right now is kind of what I'm looking at it, kind of like oil, whereas it hasn't developed as far, right? But really we kind of are in that downward trend. We kind of have our most recent level of resistance above us and a level of support right below us. We're kind of hanging out here in the middle right now. But to me, clearly this is the most bearish of the indexes. Overall has done really nothing productive for quite some time. Our only real sign of life was bouncing off of support back here, but of course that has since failed, so that doesn't count anymore, right? Get us on the right side of that, maybe we can talk a little bit Russell, but that certainly got to happen before I have any bullish inclinations whatsoever on this chart. So as you can see, very interesting day. Again, early selling, nice, fighting back on the intraday, led by our good friends in the technology sector. Their charts might not look pretty, but they definitely came through for the bulls here today. Watch those intraday highs, as we know, those are potential entry points for traders, maybe not specifically you or specifically me, but we know that traders do use that as a way to get into trade. So if we see, these intraday resistance levels taken out, it'd be interesting. If they push us back down, probably shouldn't be too terribly surprised at that either, right? Over in the material sector, again, we're going to see, pretty common theme for the most part, a big, red candle early, caught our footing on the intraday. From a purely technical point of view, that was a clean break. We'd seen that 2-day little intraday floor develop on Thursday and Friday. When that went down today, there was some pretty good selling on this ETF and the sector as a whole, but we were, much like the S&P, able to come off of that intraday low and close back above that support level. So I think at least today, a close is important, at least to me. I wouldn't call this a break. Certainly it did, break us on the intraday, there's no doubt, and you may call that a break. For me, the close is what will matter, and at least for one more day, the material sector holds. Same but different, I guess, on the energy. Energy was kind of weird, where it, and I don't say that as it didn't make sense. It actually made a lot of sense. I guess its chart's kind of in a weird spot, where we sold off, still closed well down over a 1.5% on the day, but we worked our way all the back to our previous support level. That's where we kind of caught our footing at around $62. That's going to be a pretty important price point to be looking at, in my opinion. If we rally back up into this area, which is going to line up with our moving averages, this area is another one of those that looks, not very good from a technical point of view. Although, as I was kind of browsing through a few energy stocks, some have, broken down. A lot of them have broken through support, like APA. I know that they were in our stock, I can't remember, stock or option report this past weekend. Of course, they took out a major level of support. A lot of things are looking something like this, but I also saw quite a few stocks or S&P 500 stocks in the energy sector that were about to test these points. So it's going to be interesting as we look at the ETFs, more in depth. That support level has been important before. Let's see what happens as we work back to test these old lows. Those short-term moving averages are going to catch up with us, most likely at least, and should present some potential challenging opportunities. Still, I have a hard time understanding how anybody can be bullish on this sector right now. I know everybody's entitled to their own opinion and are free to spend their money the way they see fit. And so, of course, if you feel differently, that's fine. I just don't understand how you could make much of a bullish case for it. It's bouncing off of support. I guess that's something, but that's not enough for me. As we saw when we looked at those individual financial stocks, I mean, this is really, in my opinion, the area that's beat up the most. It took out support early. It ran, and yes, it did catch its footing and caught itself up on the intraday. But as we kind of saw when we were, taking that bird's eye view of the different financial S&P stocks, a lot of these things have broken down, are now going to have to test what appear to be much stronger levels of old support, at least to me, as resistance than just the ETF. The ETF's got to challenge that old support level as resistance too, right? Unlike, certain other areas, we didn't even try to push through it. So, I think it was relative weakness here just on the intraday level. But that is a resistance level that, of course, we're going to want to keep an eye on. But when you kind of think about how some of those individual stocks look, I have a hard time believing that it's going to be easy for it to break through that resistance level. That sector is, it's funny how things change. As it was pulling back to this trend line here, I was open to certain areas within it. And then the banks, the banks in my mind have been kind of what's been leading the sell-off. And they just kept getting uglier and uglier and uglier. And today, I don't know how you could want to buy into this sector, currently the way it looks. That to me looks like a very, very bearish sector. On the flip side, you have our industrial sector that very similarly to the financials took out that old swing low, took out that support level on the intraday. But as the market rallied, it rallied back up, closing back above that support level, at least for the day. So as where, in the industrials, that is something. To me, it is. That is, it's not necessarily enough to run out and think this is the bottom on the industrial sector, because I don't really feel that way. But it shows me a lot more strength than what I saw over in the financial sector personally. Watch this price point. Obviously, this is going to be, a potential area. This is going to be a tough area for me to want to buy in the short term. If this is a support bounce, or we think this is a support bounce, want to trade within the sector. There's a lot of overhead in a lot of these areas. Not a huge fan of the sector all that much. It just really benefits from me looking at, that's just my routine. I look at financials and then industrials, and I've been doing that for a long time. So I think it looks, better in some ways because I just looked at the financials. But regardless of that, the simple truth is we were able to close back above that support level. And that, regardless of my personal feelings, does show a little bit more in that sector. Tech really led the way here today. Again, the charts are not pretty on the tech sector. It is very beat up, and there aren't any, across the board signals that I'm seeing that I'm very excited about right now. But again, as we kind of saw within the NASDAQ, I mean, this is the second time this is, really propped us up on Thursday too, in my opinion, as things were going kind of crazy on the intraday. It is showing some pretty interesting resiliency right now. So again, I don't see the path just yet. It hasn't developed technically right now, because hey, the reality is we haven't broken resistance yet. We're making lower highs and lower lows. And maybe it's just a weird coincidence, that tech has been a leader, last couple of trading days. I don't know, but it has, impressed me with its resiliency. Watch as we approach this old support level. Again, these shorter term averages, they're going to start catching up with us. And we know that while maybe not thinking about them as resistance, thinking about them as challenges, as things that can, push the stock, that is definitely something I'll be watching for. Again, every time we think about, whatever we're trading, we're thinking about, what's kind of next, right? What's its next challenge? What's propping it up? Things of that nature. And that's why this market, to me, is going to have such a hard time, even if it wants to go up. There's so many challenges all over the place, and so you break one in theory, and you're greeted with another one right away. But again, that can change, and of course, we'll see it together. Over in staples, broke down, broke that support level again on the intraday, did rally, did close back above it, which is certainly a positive sign. I'm not loving the fact that it's having this little dance right now where it breaks on the intraday and saves on the close. I don't think it's a bearish, signal or anything like that, but I would prefer that support level wasn't so easy to take out. And yes, I know the market's been volatile, and I know that's playing a part because we've seen it many times, right? When the market's freaking out one way or the other, these support and resistance levels sometimes just can kind of get in the way, right? And so, and I'm not going to, put too much stock in it, but I'm starting to feel that, what? You're supposed to be putting up a little better of a fight. You're supposed to be a little more tempting. Now, again, until we close below that, I wouldn't read that as a bearish signal. And if we're, able to start to show some upward movement, I'm certainly okay to still look at this area from a bullish perspective. I still think it is one of the better looking, sectors from that bullish point of view overall. But not loving that it's been so easy on the intraday to take that out. But at the same time, I do take that with a grain of salt because the 2 days that it did it were pretty big days, right? I mean, there was a lot of movement, a lot of selling those days, a lot of fear those days as it was happening. So, I'm not going to go crazy about it. If it was doing this in a more normal, quote unquote, market, that would concern me a lot more than it does. But it definitely caught my eye. Over in the utility sector, we continue to maintain strength over there, continue to see movement within the sector on an intraday level on a pretty regular basis as we were still challenging that all-time high on the ETF. Many of these ETF or these individual utility stocks are in nice, strong trends and are either, a lot of them, I would say probably, again, don't quote me on this, but I would say more have than haven't already kind of taken out their resistance. Just kind of in my head math, I didn't do any extreme calculations there. But of course, I've looked at all of the S&P 500 utility stocks, and maybe as a whole, it seems like more of them have broke resistance and are challenging resistance. Continues to be an area that is performing well. There's no doubt about that. Again, but we know that resistance is now it's bothering us, right? As short-term traders, at least, we bumped our head up in that range now on 3 separate occasions over the last trading week, and so clearly traders are keeping an eye on how it's behaving as we work up into those highs. Over in the healthcare sector, broke down through this trend line early in the day to catch its footing. I guess it's time to extend this line out back at that old support level, rallying back up and closing back above that trend line. This is interesting to me personally because the trend held. The trend held. Again, it took out on the intraday and did test support, but that held. Of course, it's no surprise that I am a fan of the healthcare sector. And from a bullish point of view, that is one of the areas that I'm not saying it's ready to rock and roll. But when and if I get some signals, this is an area that I probably personally most interested in, right or wrong. Only time will tell, I suppose. But I do like the resiliency coming off of that support, closing back above that trend line. Again, still a lot of stuff, to shake out before we're seeing a bunch of nice clean buy signals across the board, I think, in this sector. But I do look at that as a little bit of a positive. This is kind of chart-wise kind of middle of the pack, right? It's not quite as ugly. Well, it's not nearly as ugly as, financials, and not quite as ugly as maybe materials, industrials, maybe not quite as pretty as utilities, as real estate. but it's kind of a middle of the pack chart, I think. But watch that support level. 89 clearly is an important price point for this ETF right now, no doubt, in my mind at least. Over in the discretionary, bounced off of support, showing a little bit of resilience on the intraday. I don't really think anything too interesting happened. I guess the only thing that might have been interesting might probably depend specifically on you, and that's I'm interested in buying the ETF off of this support level. If I see some upward movement, I'm going to buy it. I'm going to put my stop down here, going to put my stop down here, trying to trade back up, into this. I do think it's continuing to range. And if that's kind of your approach, I could see how you like the development of today's candlestick. If that's not what you're doing, that's not what I'm doing. I don't really think it's changed things a lot other than to say, hey, support did hold for us within this sector. Again, not seeing any buy signals right now, but I do think you could make a case that, hey, we are sideways, right? You look at it over the last few months and it's been fast, it's been volatile, but we are, trading within this, approximately 102 to 110 trading range, back and forth and back and forth. And so a bounce off of support today could lead a little bit more. Yeah, that is kind of what this sector is doing, at least as of right now. Over in real estate, pulled back on the intraday, caught our trend line that we've been using pretty consistently. That trend line has been very effective within this sector since it broke out of resistance back through here, popped off of it nicely, closing right around that 34. We know that was kind of an old breakout point. Not overly concerned about it. The sector charts, do collectively, in my opinion, look pretty good. I would like to see if I'm thinking about moving in off of this pullback opportunity, and I didn't get an opportunity to come off of on the intraday because we tested that trend line very quickly here today. I'd like to see it push back above 34 just to make sure. I'm not overly concerned about it, but it was a big deal before. We closed right below it. I would have liked it a little more if we closed right above it. So I'd like to see it push through that just to put my mind at ease. If I'm looking at it from a bullish perspective. From a bearish perspective, I can't really see an argument right now. It could be one of those that you're not interested in, fair enough. That you're bullish in, fair enough. Can't really see a bear argument as the chart currently stands here today. Of course, that will eventually change, whether it's this week, next month, the next year. We'll see it. But right now, really no sell signals, in my opinion, within the sector. And then a nice rally off of that 20-day moving average, off of that little trend line that it's steep, and it can't go on forever. At least you think it can't go on forever. But it has been very, very effective as of late, no doubt about that. And lastly, over in the communication services, we fought back today. I mean, the charts are still just ugly, right, including this chart. But we did fight back here today. I think the second, percentage gainer wise sector of the day, just behind technology, up at 0.76% here today. Nothing technically changed in my mind. We've got to break resistance. If you aren't doing it, no matter what today looks like, I'm not believing you're going to do it tomorrow. That will always be my philosophy. But did show some resiliency here today. No two ways about that as we kind of wrap up our look into the sectors here today. Very volatile. Not a lot changed. I think, I think a pretty, big challenge on the financials. Personally, I think that break is more important than it looks. And as long as we are below that breakdown point in the financials, I have a hard time wanting to, even think about those that area from a bullish point of view. We'll see how we move forward as the week progresses. Over in our metals, we saw a little bit of upward movement and then a little bit of profit taking here on the gold. On gold, not really much to see here. I mean, it really is the same read as it's been for a while. We've broke out. You're either on board with the breakout or you're not. You're in the breakout, and as long as we hold the breakout point, you can't be unhappy with how it's developing. The 200 is kind of looming right above us. That'll be something that we want to keep an eye on, particularly from a shorter term perspective. Watch for these short-term moving averages to maybe catch up, see how it responds. I'll be interested to see how it responds when it tests the 9 EMA, which I will assume it's going to do in the not terribly distant future. whether it's by it pulling back or the 9 catching up. We will see over in silver, again, kind of like gold, pushed up a little bit before kind of selling off. Really didn't do much to change your charting. You're either like me and waiting for it to come out of this range, whether it's above 15 for a buy signal or below 14 or wherever exact numbers you have, maybe vary a little bit for a sell, or you're trading within the range. And well, when you're in the range, you're going to go back and forth as you try to work back and forth through the range, right? So not a lot changed over there. Over in the dollar, pulled back to that 50, and man, did it pop off of that dollar index popped off of that 50-day moving average today. These moving averages, it's easy to kind of either discount them, they don't matter, or overdo them. Oh, it's at the 200, got to buy. It's at 50. But if you kind of get used to seeing how the intraday, how price reacts when it gets to those, I think they can be a lot more useful to you, especially in this environment that we're in right now. Really nice pop, closing kind of at the top end of some old resistance. A lot of nice strength. And again, I have no objection to anybody really playing, into the strength of the dollar as long as we hold 96. Obviously, if we had an opportunity to, specifically trade, the dollar index day off the 50, that was a really nice play. But I know I didn't get that opportunity. Well, I did. I just didn't see it, I guess. So I didn't take advantage of it if I did have it. Watch this general area. Obviously, 97.50 would be, the in my mind, the bull signal that there's continuation for us. We've got a lot of little levels of overhead resistance between here and there, nothing really substantial in my opinion, but there's always going to be a little something as we try to work our way to test, that old, resistance level back here. But again, I have really no objection to people trading into the strength of the dollar right now personally, as long as we do hold 96. You could maybe make a case to now hold the 50 since we've seen that movement off of that. I could understand that too if you want to play a little more, conservatively, so to speak. But a nice bounce today, no two ways about that. Over natural gas, continued to be range bound as we really have kind of established our area. Right now, you did see a little bit of movement on the intraday going into an hourly chart here today as we kind of worked our way to that old top, early, and then really kind of gave it back. We've seen a lot of volatility in natural gas, right? That probably shouldn't surprise us. We really, I think, as you're looking at this from a swing point of view, the same thing I've said many times before, I think it's a very difficult thing to swing trade directionally, cash flow strategies, things like that. Sure, it's been pretty solid from a bullish point of view, in my mind, at least. But really, I think we've developing three kind of primary areas at about 425 and about 480. Those are the three numbers that personally I'm keeping an eye on as support levels or resistance levels as we go into this upcoming week, and who knows, maybe the rest of the month over in natural gas. And then lastly, over in crude, we're getting closer and closer to testing 50. We didn't get there today, but we did see more selling in this area as we kind of continue to go back and forth between 50 and 55. Again, not much of a different technical read today. I think, for me, the signal I want to see is the break of 50. That is what I think will be the easiest to identify just from, talking to other traders. That's what the majority are looking for as the signal. On the flip side, like I said last week, while I can't really see right now with the way the chart looks, me being one of them, I can understand if we break 55, that is going to be a little bit of a bullish signal. I can't see a scenario right now where I would like it enough to trade it by any means. But again, that can change. We might go sideways for the rest of this year, right? And I might feel a little bit differently if we're still sideways between 50 and 55 on January 3rd and breaking through that. I probably would. If it were to break 55 hypothetically tomorrow, I'd understand if you called that a tradable signal. I just wouldn't trade it, is all. But I think we have a clear, idea of right now we are in a little bit of a sideways situation. Clearly, the downtrend is still intact, 100% in my mind. 50, 55 are the numbers to be keeping an eye on. And lastly, Ed, if you're watching here today, added the VIX. As I said last week, I don't use the VIX. I don't really think it's all that useful, but that is just my opinion. And if you disagree and find use in it, great, use it. Continue to do so. We really haven't seen a lot of change, and that's the problem with the VIX is right now the market. I don't think it's hard to say that the market is on pins and needles right now, right? And so, we did, see a little dip on the intraday for whatever that's worth to you. But we've kind of worked into the top end, of the range on the VIX, where we've been floating around lately. Only once in the last year, I believe, have we actually popped through that area. Volatility's not gone anywhere, and until it does, I will just assume it's not going anywhere. I always think that that is a good approach. Whatever's happening, assume that's what's going to continue to happen until it stops happening. That'll always be my approach. So that'll do it, ladies and gentlemen, for the market recap here today. And certainly it was not dull. There's no doubt about that. There was a lot of intraday activity. This market continues to be, a more intraday traders market, in my opinion. A lot of opportunities because of that volatility, but that kind of, hits the other side as a swing trader. That kind of makes it a little more difficult because, well, where do you put your stop? Easy to see any bullish stop I had today, on a directional trade. I have a hard time imagining anything didn't get stopped out, with the downward movement that we saw when we did take out that support, even though it was just on the intraday. So it is, a little more of a difficult swing traders, at least directional swing traders environment, in my opinion. It's a good place to practice, good thing to learn, get some practice in it, if nothing else. Don't chase it. It's not going to be like this forever, whether it's, a few days from now, a few weeks from now, a few months from now. It's not going to stay like this. Well, I guess anything's possible, but I don't think it's very likely that the volatility stays this high forever. But until it stops, let's just assume, we should probably expect more volatility tomorrow. I think that's a good approach to take. With that, ladies and gentlemen, as always, thank you so much for your time. It's my pleasure. Be sure to subscribe to the channel and hit that notification bell if you haven't already. And be sure to follow us over at Tackle Trading on Twitter as well to keep up with some of the more interesting things that we are running into during the market day. If you enjoyed the market recap, it's always helpful and appreciated if you give it a thumbs up just to let us know that it is helpful and we're on the right track over here. With that, ladies and gentlemen, happy trading, get out of here, and I will see you in the next one.